All right, today we're going to talk about down payment assistance. Is it worth it? What are the ins and outs? What should you know? So here we go. So down payment assistance, also known as DPAs. What should you know about them? Well, most counties, sometimes even cities, but counties or states will have organizations that help to run down payment assistance programs. Now, some of these programs come from some of the big banks doing some naughty stuff that they get caught for, and they have to pay a bunch of fines. So instead of the government just taking all those fines for itself, they'll tell that institution, you need to create something to give back to people because you screwed them, basically. And so you'll have these individual down payment assistance programs that'll pop up in different places, but they're finite. They only have so much funds devoted to them, funds that were taken from the bank that mess things up. One of the biggest perpetrators of this being Wells Fargo, just to put that out there. But most down payment assistance will actually be like a state-run agency. So in California, you have Cal HFA, or CalHFA we call it. There's the Golden State Finance Agency that also has programs. And what you need to know about this as someone who's looking to purchase a home is, where would this work for me? Does it make sense that I even pursue this? Now, when it goes to qualifying for it, it's actually a very similar process of qualifying that anyone does when they're looking to qualify for any loan. So you're going to go through kind of the same process, but there's going to be some caveats and some overlays. So with most down payment assistance programs, you have to be a first-time home buyer. That means you did not have any ownership in any property over the last 3 years. That's typically one of the rules. Now with the GSFA, the Golden State Finance Agency, they actually will allow you to not be a first-time home buyer, but you can't own any other real estate and use a down payment assistance program. Usually the debt to income ratios are going to be a little bit lower, so you still have to make pretty good money, but there's also income limits. So if you make too much money, you can't use the program. So a lot of these programs have a very narrow window that people have to kind of slip through. They have to make good money, but not too good, and they have to not have any ownership in things, but those are usually the big ones. It's how much money, and that's household income, by the way. Household, not just yours. If you got people in the house making money, they're going to ask you how much money does everyone make? What should that look like? So, but as a first-time home buyer, what are you looking at? Now, what is the difference? So most down payment assistance programs, what they'll do is they will basically give you money to go towards your down payment or your closing costs, or both. So with Cal HFA, you can actually have a second mortgage that basically pays a good chunk of your down payment, and a third mortgage that'll actually pay a good chunk of your closing costs. So you won't actually come in with a whole lot of money out of pocket. You'll come out with a lot less. That's the whole point. It's down payment assistance. They're giving you funds. Now, what's the drawback to using this? Well, you're going to have a second and third mortgage on your property that usually it'll be a really small interest rate, 0%, 1%, 2%. It's going to be very small. But when you go to sell your home, you have to pay those back. So whatever mortgage you have in your first, you got to pay off the second, you got to pay off the third. So you got to have more equity than you might think when you go to sell your home. That's one of the biggest drawbacks. They're also kind of known as silent seconds. They're not always recorded to where they're in the track of the home of your look at your title policy and it says, look, this mortgage was recorded on this day. Sometimes they're not recorded, but they are there, so they can pop up. So just things to be aware of with down payment assistance. But it can help you get into a home if you have a decent income, you've got the good job history, but you don't have a lot of cash on hand. So those are kind of the things that you have to weigh back and forth. Should I use down payment assistance or not? Another quirk of down payment assistance is usually the program, whoever runs it, will choose the interest rate. It'll be loosely tied to the market. So if the interest rates in the market are going up, typically down payment assistance rates will go up as well, but not nearly as fast. They're usually delayed in their movement. So if you get pre-approved using down payment assistance and like 6 months go by, the interest rates might have changed. And sometimes they're going to be a little bit higher than what you could have gotten if you didn't use down payment assistance. But if you needed the money, it's a good way to go. There's some programs that'll have a second or a third that gets forgiven as soon as escrow closes. And it's really just like a gift. And the only drawback is you have to stay in the home for a certain amount of time before you can sell it. A lot of the state ones are going to be more general, but if you have something really specific, like from a county, and you can go on websites and you can find them listed for wherever you live. Say down payment assistance and look up what it is. And then usually they have a list of lenders that that are affiliated with it that can help you out and say, yes, I have access to this program. This is what it looks like. But you can find that information online. So that one's usually not too bad to look up. But the more localized ones, the ones that are going to be very specific to like a county or even a city, those are going to be the ones that are a little bit harder to fit right through that little window spot that I talked about. Whether your income, you don't want to make too much, that sort of thing, funds they have available, it's going to be a little bit harder to qualify for those. And sometimes they want you to stay in your house even longer because what they're trying to do is stabilize certain neighborhoods. If there's a neighborhood where a lot of people are leaving it, so the neighborhood itself is going downhill, they might offer down payment assistance for someone to move into that neighborhood to help stabilize it. So they might say you have to stay in your house for 5 years, and then the money will be forgiven. Or you need to stay in the house for 10 years, and then the money we gave you will be forgiven. And if you try to leave before that, you have to pay some of it back or all of it, depending on the program. So down payment assistance, I think it's worth it. You just got to make sure you use a good program. The loan officer you talk to, they have to be affiliated with it. They have to be able to do it in order to help you. So you either find the DPA website and go that way to look for the loan officer, or you talk to a loan officer and you say, hey, can you do this program? Is it worth doing? And usually they'll know about it and have some in and outs, or they'll have access to other programs that you can look into. So I've personally, on the teams I've worked on, I've done hundreds of down payment assistance loans, and they can be a real benefit. They can help out a lot of people. So it's just something to consider, something to think about. If you like this content, please give us a thumbs up. And if you have any questions, comment down below. If you haven't already, subscribe to the channel. I'm going to continue making these videos just on various subjects. I have lots of videos already in the library if you want to check out, if you want to learn more about this process of buying a home and what to expect. So thanks for your time. We'll see you next time. Peace.